What's going on, everybody? It's Stas here. So the stock market took a beating today. S&P 500 down 28 points, 0.8% in the red. The Dow Jones down 130 points, roughly 0.5% down. And the Nasdaq got crushed, down 170 points, almost 1.5% in the red. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over the top stocks that I'm actually looking to buy right now. And obviously, the markets have been very choppy, very volatile, so I want to go over whether or not we're ready to crash here in the markets, or is the market getting ready to rebound? And I also want to go over what I personally did in the stock market today. So a lot to cover. If you guys find value, hit that like button for me, subscribe to the channel, and join our free Strive Smart Discord chat, free Strive Smart Facebook group. And don't forget to claim your free stock from WeBull, which is valued up to $1,600. All of those are linked right down below in the description box. So let's get into it, guys. Today, it was a very choppy day, and it's been choppy. You guys know that. Ever since the beginning of September, the markets have been taking a beating. And we all know, well, most of us know, that historically, September has been a very bad month in the stock market. I think it's the worst month historically speaking. So history is definitely repeating itself so far in this month of September in 2020 with today's performance. Again, S&P down about 30 points, and the Nasdaq got hit very hard, same with the Dow. So take a look. Today on the S&P 500, on this intraday chart, you'll be able to see we held a very critical support. That is good for the bulls. That is very good, and that support is right around 33.30. We gapped down. We opened up at about 33.30. We rallied a bit there. We pulled back down. We got rejected by moving averages here on the intraday chart. We retested 33.30, popped back up, got rejected again, but we retested 33.30 and rallied into the close. That's a very, very good sign for the bulls here. And if we zoom back a bit on this 20-day 1-hour chart, you guys can kind of see a reverse head and shoulder pattern here on the S&P 500, right? You guys can see the left shoulder here. The head formed as we hit that low at 33.10, and the right shoulder could very well be forming right now with the rally that we saw in the end of the session today. So this is important for tomorrow and heading into next week, guys. Tomorrow, do we gap up? Do we end up breaking out of 33.90? If we do, that could signal, seriously, guys, that could signal another big gap up in the market. Let's say if we break 33.80 on a gap up tomorrow, maybe we go back up to 3420, maybe even the mid 3400s. And I think that the second we break 34.20, we're going to break out from there. That is going to be where the markets take off, and that would be a bullish reverse head and shoulder formation at that point, right? That would signal that we could be heading back to the 3,500 level on the S&P. But the second that 33.30 breaks, right, and the second that 33.10 breaks, which was the head on this reverse head and shoulder pattern and the low from the 11th of this month, the second that those two support levels break, then this pattern is useless, and we're going to be heading lower from there, probably down to about 32.80, 32.75, like I've been talking about here on the channel. And you guys can see on on this 4-hour chart, 32.85, 32.70 is right around this 180 SMA on this 4-hour chart. So this could be bullish. You know, this could be bullish, the reverse head and shoulder here, if we break those big resistance levels, guys, and that's a big if. And if we do, maybe we go back to all-time highs. But again, if we break 33.30, 33.10, we may be going lower here. And quite honestly, it depends on a lot of things. One, at the forefront of it is definitely stimulus, guys. This is huge. If we get another stimulus package, which if I'm a betting man, I'm betting on that we're going to get another stimulus package. The thing is, what are the Democrats and the Republicans going to agree on? That's the big question, the $1 million question, right? But if I were a betting man, I think we're going to get stimulus packages for political reasons here as the election is coming up. So we have stimulus, and again, I think it's going to go through, and I'm sure you guys will agree. Let me know down below in the comments. We have stimulus, we have election, we have the Fed here saying they're not going to raise rates until 2023, if that, and I doubt they will at that point in time. So there's a lot of moving parts, and on top of that, a lot of companies are still under duress. Obviously, in Main Street especially, right? But even in the big leagues, there's a lot of companies that are still under pressure, such as airlines, cruise lines, hotels, restaurants, and many more. So there's a lot of moving parts at this point. I'm being very careful, very, very cash heavy at this point in time over the next couple of months, as I think that the volatility is here to stay for at least another 2-3 months at least, guys. And when it comes down to the Dow Jones, you can see a very similar pattern, right? This reverse head and shoulder. We got the head here at 27,400. We got the left shoulder here. Right shoulder could potentially be forming here if we end up breaking out above 28,200. And that's a big if, right? If we break 28,200, which we obviously got rejected at yesterday, this could be going much, much higher, right? Much, much higher. I think the Dow could be going back up mid-29s, 29,000, maybe up to 30,000 to test the all-time high. Who knows? But at this point, we're still moving a bit horizontally. We're still trying to figure out whether or not we're going to break out of this reverse head and shoulder or what. And I'm going to be giving it some wiggle room. Again, I'm pretty cash heavy. I'm not going crazy in the stock market at this point, knowing very well that we're going to be volatile, and I'm pretty confident that it's going to be volatile here in the markets moving forward. And take a look here. I mean, this is an interesting pattern that I just pulled up. You know, we got that reverse head and shoulder on the smaller time frame, but we pull back to the 4-hour chart. Now it seems like we have a head and shoulder, not a reverse, a regular head and shoulder, right? Left shoulder, head here, and now this could be the right shoulder forming. And I think if we break 27,500 on the downside, that's going to be where a lot of selling pressure kicks in here on the Dow and across the markets in general, and that could lead to more selling, maybe down to low 27,000 and maybe down to, let's say, the mid 26s. So watch out for those levels on the Dow. And let me pull up the S&P. Are we seeing a head and shoulder on the S&P forming? Not as prominent as in the Dow, but still you could argue that this is a head and shoulder forming on the S&P as well on this 4-hour, especially if 3330 breaks. And going over to the Nasdaq, you guys can see it as well. You know, we're holding 11,000 bucks if we or points rather. If we zoom in a bit on the 20-day 1-hour chart, you guys can see it very prominently there. That's a good sign for the bulls. And the reverse head and shoulder is not as prominent in the Nasdaq as it is in the Dow and the S&P, but you guys can still see it. And I would say if we end up holding 11K tomorrow, next week, there is a chance Nasdaq could rally back up to the mid 11s, 11,500, and at that point, that's going to be where it needs to test. If that breaks, that is where we might see a big push in the Nasdaq, and that would be obviously extremely bullish. But the second we break 10,900, 10,800 here, I think Nasdaq could be going lower, right? On the 4-hour chart, maybe we go down to the 10,700, maybe back down to 10,400. And we're going to have to wait, guys. Patience is key. Just keep an eye on those levels, and once they break, then you'll know, okay, we're bearish now, we're bullish now, we could be going lower or we could be going higher depending on what level does break. And we also got jobless claims numbers today, guys. We got claims for unemployment insurance totaling to 860,000 people last week. And it seems like these numbers, it's like you're desensitized to them at this point. It's been 30 weeks almost, of all these crazy numbers for jobless claims. And it's like, 860,000, that's not that bad, right? Considering we've been over 1 million for most of the weeks. But if you sit back and think about it, it's 860,000 people, guys. You're one person. I'm one person. Could you imagine 900,000 people filed for jobless claims? It's still a ridiculous amount. It still shows that this economy is still hurting at this point. It's still hurting. And there's no, I'm not going to say there's no return because I'm not a doomsdayer. I'm very optimistic, but it's going to be tough getting back to where we were. It's no doubt about it. And that's actually down. The 860,000 800,000 is down from the 893,000 we saw from last week, and it beat the estimates of about 875,000, but still, 800,000 people are pretty much filing for jobless claims. That's unbelievable. And like I said, guys, it's going to be a key figure to watch out for. That, as well as, of course, the stimulus. Stimulus is going to be huge for the market, because if another massive deal goes through, we all know when they print money, it pushes up asset prices. It pushes up stock prices. It pushes up real estate prices, whether or not Mr. Powell wants to admit it straight up or whether or not he wants to dodge it. That's what it does at the end of the day. It inflates asset prices. That is very, very basic stuff. So let me know in the comments, guys, what are your thoughts on the markets, where we're headed? Are we ready to crash further? I think it's likely. I'm not saying it's very likely, but I'm thinking that there's a decent chance we go lower. And yeah, if we go higher, I have cash, and I'm sure you guys have cash to be ready for those opportunities once those technical, breaks happen to the upside. So patience is key, guys. Don't freak out. Don't, make any crazy decisions. And at the end of the day, you can do whatever you want, because this is not financial advice, guys. I have to throw my disclaimer here. This is not financial advice. I'm just simply saying what I'm doing, my thoughts, and my personal opinions here. So let's get into some trades. What did I personally do today? And the truth is, I didn't do much. Again, I'm very cash heavy. I'm being patient, cautious, the whole 9 yards, but I still ended up buying a little bit of Amazon, AMZN today, guys, because Amazon is one of those companies that I think is poised for a bounce back. You could argue that Amazon's going to go to $2,800, $2,700. Sure, we could argue that all day, but me personally, I don't think, and let me know what you guys think in the comments, but I don't think that Amazon's getting much lower than $2,900, $2,800 at this point in time. I just don't see it. We're already oversold. Our side is getting to oversold status. It already is there. It's at 30, right? And it's down about $550 off its highs. It's shed already 15%. So if we're taking a look at Amazon, I mean, it's almost in a bear market, right? You guys know, most of you guys know, when a stock, an index, whatever, goes down 20% from its peak, that's a bear market. Anything above 10% is correction territory. So we're well past correction territory. Now we're getting into almost bear market status. So I picked up a little Amazon. I got filled at $3,010. This was actually way earlier on in the day. I think it was right around here on this intraday chart. You guys can see it. It was right around here, literally. About 30 minutes into the market, I bought Amazon at $3,010, and this is one that I'm looking to swing trade, honestly. Same with Shopify. Shopify is another one that I think is not going to go much lower. If I was a betting man, which I kind of am at this point, if you're trading the stock market, it's not like gambling in Vegas. I hate when people say and compare it to that. It's very not comparable. It's not. It's just not. But if I were to, bet that, hey, is Shopify going to go lower from here? I don't think it's going to go much lower. That's just me being honest. The lowest I can see it go is maybe, 800, 780. But even at that point, I just load the boat even more. So I'm cool with it going lower. I'm cool with it going higher, but I'm buying in here, guys. I got in yesterday at 913. I'm still holding on to that position, and I'm looking to maybe average down a little bit. We'll see over these next couple of days, weeks, what ends up happening. But again, I'm just being safe, playing it patient. And but I still want to play offense at the same time, because if these stocks end up ripping, Shopify, Amazon, some of the other ones I have here, I want to have my toes wet. I want to have some skin in the game. I don't want to be all cash. So there is a bit of risk involved, yeah, but I'm aware of it, and I'm willing to take the risk that these go lower, right? That's kind of the risk you have to take when you're trading in the market. So Amazon, Shopify, those I'd say are my main two at this point. IPOB I bought in yesterday, 100 shares, nothing crazy. I'm down a little bit on this, but then again, it's a small position. I'm letting it ride a little bit. I'm in at about 1610. No worries there. And I might even add more. I'm just giving it some wiggle room at this point. And yeah, I'm in IPOB, and I'm also in Workhorse still. And let me tell you guys, today in the markets, Workhorse was one of my only stocks on my watch list that was green. And I'm sure many of you guys could relate to that. Workhorse was up 4.5% today, up $1.20. I've been in since $23. I trimmed some profits a couple days ago at $25.30, and I'm letting the rest of my position ride. And here I am. I'm still holding on to it, and I'm very happy as to how it did today compared to the rest of the market. For the most part, getting crushed. So I'm in Workhorse. I'm also still in Apple, ticker symbol AAPL, at about $125, guys. So I am in the hole a decent amount here on Apple, but the same philosophy kind of goes with what I said in terms of Shopify and Amazon. I want some skin in the game. I'm not freaking out, selling out here, but I'm not buying more either at this point. I'm just letting it do what it's doing. I'm letting it do its thing, and yeah, I'm just being patient with it, guys. So overall, my main word for today's trading update is patience, and you guys have heard that for the past 2-3 minutes, and that's what I'm doing. Apple, Workhorse, Shopify, IPOB, and Amazon. Those are my main holdings at this point in time, with a pretty good amount of cash as well. Just getting ready for what the markets throw at me, and I'd love to know what you guys have to think. As always, down below in the comments, let me know. And let's get into some other ones now. We saw a pretty good sell-off, obviously, across the board today, and a lot of stocks sold off even further. Adobe down 0.4% today. It closed at 474. It's down about, what is that, like 60, 70 points off of the all-time highs right now. That's about a 12% drop on good earnings that we got a couple days ago. So Adobe could be a play here off of this support at around 470, 475, right? Maybe back up to about $500, $510. That's kind of something that I'm looking for here in Adobe. And yeah, if the markets sell off tomorrow, if the markets fall off a cliff, guys, a lot of these stocks are going to fall as well. So, it depends on what the markets do in general, but if we get a healthy bounce back day tomorrow, watch out for Adobe. I'm telling you guys, it's going to do well. Okay, let me take that back. I don't know if it's 100% going to do well, but if we get a bounce back day in the markets, it's likely that Adobe, being a large cap stock company here, it's likely that it's going to do well. And Beyond Meat is one of those that it's kind of like Workhorse that did very well today despite the markets getting crushed, and it's been doing well despite the markets getting crushed. I mean, it filled up from $145 up to about $157, and that's ridiculous because that's a gap that I've been looking for. I'm very excited about it. And at this point, I'm thinking if Beyond Meat's able to break $160, $158 right around here, this thing's going to go test those highs from back. Let me take a look at what month this was. Back in the middle towards the end of June. And quite honestly, I think we could go higher because take a look at this yearly chart. Notice how Beyond Meat made a nice higher low based on this pattern here at about 125, which you guys know we've been calling out 125 as a huge level of support on Beyond Meat. So we consolidated there for a good 1, 2, 3 months. Now, as we're hitting that higher low, we're tuning up, building momentum under 160. I think it's just going to explode right past it, right? Unless we get a double top drop from there, maybe back down to the mid 130s. That's possible if we do get rejected by 160, 165. But I'm thinking we're going to blow right through it, and Beyond Meat could have an opportunity maybe to get back to those levels. If you guys remember, Beyond Meat was at $200 plus per share. That is back when it IPO'd. It IPO'd and it ran like crazy. It was one of those IPOs that was very hyped up. It ran like crazy. It got decimated after that from $230 down to $55, $50. And since then, it's added a lot of components to the business. It's expanded, McDonald's, Dunkin', all these different places in China, abroad. So they've done a lot. Now the stock is starting to come back up. So I think there's a lot of potential in this getting back to $200. I'm not sure when, guys, but over time, I can see it getting there, maybe in the next couple of months. So watch out for Beyond Meat. FedEx is another one here that I'm watching on the dip. They had amazing earnings, 2 quarters in a row, just amazing earnings. And now it's down about $17 off the highs here, from 261 down to 244. That opened up about a 7% profit potential. We're holding a higher low here on the hourly chart. If we pull up the 4-hour chart, you guys can see, maybe it could come down a bit lower to 230, 235. But either way, 230 to 240, I think could be a decent buy range here for FedEx as a swing trade. That's kind of where I'm looking at it. So I like it here, ticker symbol FDX. And another one that did pretty well today, I think it inked a very small green day, but still that's good compared to what the other stocks did today, is Walmart, ticker symbol WMT, up 0.3%, up about 45 cents on the day. It seems like we're holding 130, 135 as a new support. That was a resistance stemming back from the middle of April, so that's looking good here for Walmart. Obviously, they had a lot of hype around maybe going in with Microsoft on the TikTok deal. That shot up the stock, and a lot of people were getting into it, but now that that's dying down, obviously, because they're doing the deal with Oracle, it died down a bit, but that's not going to cause me to throw Walmart into the trash, because at the end of the day, it's still a good company. I think the pattern here is attractive, and I think we could bounce back, quite honestly. So from 135, 140, watch out for a move back up to the 150s. And another one that's getting ready to rip, in my opinion, is DPHC, Diamond Peak Holdings, which is the SPAC that is taking Lordstown Motors public. And this was up 1.5% today, up 43 cents. And take a look at how strongly it's consolidating on this 5-day, 5-minute. It's been consolidating at about $26 to about $28. So I'm thinking this could end up breaking above 30, right? There's an opportunity here, in my opinion. And take a look at these trend lines I'm drawing. It's squeezing closer and closer into this little wedge that you guys can see. We're making higher lows the past 3 days, but we're still at a resistance under 29, 28.50, $30. So watch out. We're going to squeeze closer and closer into this wedge, and I think we could end up exploding above $29, $30. That's what I think is coming here on DPHC. So watch out for this one. And 2 more here, Meli. MELI, guys. This is one that is a foreign stock. It's Mercado Libre. It's based out there in Argentina. ARK Invest owns this company, and I'm not sure how many of the active funds. There's 5 active funds that ARK Invest runs. I think this was owned by at least 2 of them, and I like the company, quite honestly. I need to do more research into it, but I like it based off what I'm seeing so far. And we're down about 25% from the highs, from $1,300 almost. Now we're down to about $980, so well over 300 points down from those highs, which is about 25%. So although this one is not really recovering quite yet, we're still downtrending on all the smaller time frames, right? The 20-day 1 hour, you guys can see it. We also see a bearish cross here on the 20-day 1 hour, which is the 50 SMA crossing below the 180 SMA. You guys can see that on the 10-day as well and the 5-day. So I'm not looking to jump the gun quite yet, but the second we get a reversal on this stock, maybe back up to 1,000, 1,050, this could be an opportunity maybe to jump in on the upwards momentum on the reversal. So keep an eye on Mercado Libre, and honestly, if it somehow gets under 800, 700, screw the technicals at that point. I might just buy in as a long-term investment, quite honestly, as a more, foreign speculative type of stock, because the truth is, guys, investing in U.S. companies is great. It's obviously, arguably, it is the best market out there, the U.S. stock market, but to have exposure to other markets is very, very smart, right? I own an ETF called VEA, which I forget what's it called. Vanguard. It's the Vanguard Developed Markets ETF, which excludes United States companies, so you can get exposure with that. You could also pick companies, even in the United States, that do a lot of business abroad, such as Apple's one of them that does some business abroad. McDonald's does business abroad. A lot of companies do. You can do it like that, or you could even invest in a company like Mercado Libre or other foreign companies, over in, Sweden, Switzerland, here, there, whatever, right? So always open up your mind and understand that there's other places to invest in and diversify your money into. And the last one here is Snow, ticker symbol SNOW. And I told you guys I would not touch this stock with a 10-foot pole at this point in time due to it maybe, just maybe, falling off as the hype dies down. And what do you know? It's doing exactly that. It's falling as the hype's dying down. The second day of public trading, it's down 11%, down about $30 per share, and it's down about $100 from its peak yesterday. So like I said, these are very volatile, very dangerous, and they could go either way. Sure, you could end up buying in on IPO day, and then it runs up and you make a ton of money, but it could also work against you. Take a look. It IPO'd at 270-something, ran up to 315, 320, dumped back down to 220, ran back up to almost 300, sold back off to 240, sold off to 215 today. It's very up and down. And for me personally, this would raise my blood pressure. I don't know if I could handle it, guys. So I'm staying out. And we'll end the video there, guys. So if you found value, as always, hit that like button for me, subscribe to the channel, and let me know all your thoughts on the markets. We talked about a lot today, individual stocks, where you think the markets are headed, and just your plans in general. I'd love to know what you guys are doing. Let me know in the comments. And don't forget to join our Strive Smart Discord chat, our Strive Smart Facebook group. Those are free of charge. Also, feel free to follow me on Instagram at StockSurfS if you want more updates, call-outs throughout the day. And if you want free money, hey, who doesn't like free money? Check out that WeBull link down below. All you have to do is deposit $100 into the account, and you get one free stock valued up to $1,600. And I also get a free stock since it is an affiliate link. So I'll catch you all in the next video. Thanks for watching. As always, guys, you guys are awesome, especially if you stuck till the end. Means a lot to me. Be safe out there. Good luck in these markets. Peace out.